Hey everybody, Smart Silver Stacker here. If you've been watching the price of silver this week, you have probably noticed that it has been moving up in a very big way. In fact, so far this week, the price of silver is up almost 10%. So what's driving this movement? Well, it has to do with the US dollar, some weakness that we're seeing there, and also some messaging that we are getting out of the Fed, and more importantly, how investors are interpreting what Jerome Powell at the Fed is telling us. So we're going to get into that today in this video. We're also going to talk about some of the factors that are weighing down on the dollar and why the dollar probably isn't done falling yet. So let's get to it. Okay, so we've got the dollar collapsing and we've got silver making big gains. Now, a lot of this started following a speech that Jerome Powell gave just the other day titled Inflation and the Labor Market. And the market's reaction to this speech has been very positive for silver, to say the least. Now, what did Jerome Powell say here? Well, it's kind of a long speech. It's on the Federal Reserve website if you want to check it out. But the final paragraph here sums it up pretty well. Powell said, "It makes sense to moderate the pace of our rate increases as we approach the level of restraint that will be sufficient to bring inflation down. The time for moderating the pace of rate increases may come as soon as the December meeting." And so what he's telling us here is we're probably going to get the 50 basis point rate hike in December. But, markets already knew that. That was already the anticipation. So what is it about this speech that is driving the price of silver higher and driving the US dollar index down? Well, if we take a look at this last bit, Powell went on to say, he kind of tempered that dovishness that he had there by saying, given our progress in tightening policy, the timing of that moderation is far less significant than the questions of how much further we will need to raise rates to control inflation, and the length of time it will be necessary to hold policy at a restrictive level. It is likely that restoring price stability will require holding policy at a restrictive level for some time. History cautions strongly against prematurely loosening policy. We will stay the course until the job is done. And so if we're seeing the US dollar collapse on a speech like this, and we're seeing the price of precious metals and other assets rise, what does that mean? Well, I think it means that the markets and investors are no longer buying what Powell is saying about the hawkishness of the Fed. I mean, they listen to the first part, the dovish bit. They know that the soft pivot has basically arrived and that the Fed is going to slow down their pace of rate hikes. But this stuff about keeping rates at a high level for an indeterminate amount of time and not prematurely loosening policy, well, I don't think markets buy it anymore. And let's take a look at what the price of silver is actually doing. And if we go back to the price on Monday, the price was about $20.93. Now compare that to today, $22.92. That is almost a 10% gain in the price of silver just in 1 week. And if we go back to the beginning of the month, towards the beginning of November, you can see that the price was close to $19. So that means in 1 month, the price of silver has risen almost 20%. And the majority of those gains coming following this speech from Jerome Powell. And again, it's not just silver. The dollar is also breaking down. You can take a look at the US dollar index here. It's been on this parabolic rip higher. It was on a parabolic rip higher starting back in May of 2021. That was kind of when the Fed started to talk about potentially tightening. And then finally in March of 2022, the Fed actually began their program of rate hikes. And since then, the pace of strengthening of the US dollar index, so that's the dollar's strength relative to foreign currencies, has just been on this absolute rip, moving up at an accelerating exponential rate. And a movement like this will continue, until it doesn't. But then once that movement breaks down below that parabola, that is very bearish for whatever chart you're looking at. This is like what would be considered a blow off top. And clearly, the US dollar index now has penetrated this starting back in October and now completely breaking down. I mean, it's down from a level of about 115 down to 104. Now, at this point, is the dollar index going to keep breaking down further? Well, I think that in the long term, or even kind of the medium term, yes, the trend is going to be lower. Now, it has gotten to perhaps a bit of an oversold state at this point, so we might see some strengthening in the US dollar index from here, but I think the highs are in. I do not think that we are going to be approaching that 115 level again anytime soon. In fact, I think that we'll be breaking down to new lows before we get to new highs. And there's a few reasons for that. There's some economic news that we've been getting that fundamentally is very bearish for the dollar. I mean, first of all, the ISM manufacturing index. So the manufacturing index contracted, and here's an excerpt from the report. The U.S. manufacturing sector dipped into contraction, with the manufacturing PMI at its lowest level since the coronavirus pandemic recovery began. So we are making less stuff here in the U.S. This amazingly strong economy that we have, manufacturing and production is in contraction. We have a lot of service sector employees. We've got a lot of bartenders and waiters and folks working in casinos and things like that. But actually folks putting together things, building things, perhaps things that we might use or that the rest of the world might use, that is shrinking to the lowest level since the recovery started. And that goes hand in hand with this news that we got yesterday that the U.S. goods trade deficit has widened sharply in October. So the goods trade deficit surged 7.7% to $99 billion last month. And you keep buying things, you keep importing things, but you're manufacturing less and less. You have to make up the difference somehow. And we do it by exporting fiat currency around the world. Of course, there's only so long that can go on. And how are U.S. consumers buying all this stuff anyway? Well, it was just a couple weeks ago that we got this report that credit card balances have jumped 15%. It's the highest leap in over 20 years. And also, this is occurring at a time when interest rates are rising. So not only are Americans taking on more credit card debt than they have in decades, they are beginning to pay a higher interest rate to service that debt. And I know the federal funds rate is now like 4%. Well, you're paying a lot more on most of these credit cards. I mean, the interest rates are absolutely usurious. So this is a big problem. But this is just reflective of the bigger problem of debt that we have going on in this country. And that is that the U.S. national debt now at $31.3 trillion, got a federal budget deficit of $1.2 trillion, and that's accelerating, it's growing. So not only are we at a record high debt, but it is growing at an increasing pace. It now makes up 121% of the US GDP. And I think the last time that the debt to GDP ratio was this high was following World War II, when we finished the war. But following World War II, the government was able to shrink its spending significantly because they weren't fighting the war anymore, and they were able to get that under control. But what are we doing? We're spending more and more money. And just look at U.S. total debt. It's not just credit cards. It's not just the federal government. We've got $93 trillion of total debt in the United States. And then, if you take a look at unfunded liabilities, that gets into the hundreds of trillions. And essentially, none of this debt is going to be paid, at least not in a currency in its current form. This debt might get paid off someday, but it is going to be paid off in devalued currency. And so all of this is very bearish for the dollar. There's a lot weighing on it. And that parabolic rise up that we saw in the dollar, I think that was an anomaly from, raising rates at the fastest pace in decades. But now all of the real fundamentals and investor expectations are going to begin taking their toll on the value of the dollar. And we've also got the wider growing trend of de-dollarization that is continuing to grow. A couple days ago, I reported on Ghana paying for oil with gold, and they were reportedly in talks with Emirates National Oil Company. It's a major Dubai energy company, to barter the gold for oil and refined petroleum products. But now ENOC has denied those claims. So this is something that we'll have to keep an eye on. This is still a developing story. It looks like maybe there is some doubt as to whether or not Ghana is going to strike a deal with the UAE to swap gold for oil. And, maybe it's just that the folks over at ENOC don't want to get removed via a coup or something along those lines. And so they wised up to what was going on here and didn't make a critical mistake. But, time will tell. This will be a story to continue following. But that's not the only de-dollarization story in the news right now. The Eurasian Economic Union also announced the other day that they are proposing a common payment system among the BRICS nations. And this is pretty significant because what this would allow member states or citizens within those member states to do is they'd be able to pay with one card no matter where they go. Russia has their Mir card, and all these independent countries have their own payment system and their own cards, but if they link those, you'd be able to travel among those countries and pay just with one card. And of course, integrating your economies and your payment system like that, one, it ends your dependence on the US dollar as a common means of exchange, and also it facilitates a lot of trade among this block of countries. And we've got a lot of countries out there now, of course, interested in joining BRICS, and so this is all a rival setup to the US dollar. And that's why, among other things, the problem of crippling rising debt levels, the problem of de-dollarization, the problem of a hollowed out economy that's no longer manufacturing things, all of these things are coming together, and it's a perfect storm for the US dollar. So don't expect this chart to look any better anytime soon. Like I said, I mean, we might get kind of a dead cat bounce just because this has been such a sharp drop for the US dollar, but the trend here is lower. And I believe that as a result of that lower US dollar, we are going to see the price of gold and silver, and also gold and silver stocks, mining companies, they've been on a rip recently. All of these things are going to be moving up as the US dollar continues to fall lower. It's just like earlier this year, as we saw the price and the value of the dollar relative to other currencies increase, we've seen the price of gold and silver as measured in US dollars falling. Well, now that the US dollar index is collapsing, we're going to see the price of gold and silver continue to move much higher. And we've already seen quite a bit of that over the past month. So where do you think the dollar index and the price of precious metals are headed from here? Leave me a comment down below to let me know what you think. Thank you all very much for watching. Stay safe and happy stacking. Smart Silver Stacker out.